Good afternoon. This is Michael Dobrina from Gold Leaf. It is Tuesday, March 10th, around 1:30 in the afternoon. I thought we would give you guys a quick update of the markets with all that's been going on. We started 2026 very optimistic about the AI-driven growth and rate cuts in the U.S. Then we got hit with all this geopolitical shock, a lot of conflict. So yesterday, I I'll introduce you more formally in a second. Ren and I were talking about the markets, and I was sharing with him that I was probably going to do a quick video to give everybody an update of the marketplace, just to give you a feel of what the strategy is and what's going on in the marketplace. And I thought it would be a great opportunity to invite him as part of our discussion today. So for those who don't know Rana's been working with us for probably 15 plus years, and we utilize him quite a bit as an investment strategist to help us direct us in the right area when it comes to the marketplace. So I thought we'd have a quick chat today, Rana. So thanks first of all for coming.
Thanks, Mike. It's always a pleasure.
And so, okay, today we're going to talk about a number of things, and we're going to try to keep it short, maybe for about 20 minutes. Maybe the first thing I want to start off with maybe is really the war. I mean, that's the first thing that people are thinking about on the war, the conflict, what's actually gone on in so far 2026. I mean, there's a lot of things that have been moving with all this geopolitical conflict in the last 2 months, probably more than we've seen in almost 2 years. But Ray, why don't you give us a little bit of perspective on what you think is going on in the war, and especially yesterday, before you go on, yesterday you and I were talking about all this stuff, and all of a sudden, in 24 hours, the markets have changed, the tone has changed. It's amazing how quickly.
That is like the weather.
Yeah. So go ahead, Lana.
Uh, Mike, we've been immune from a war for the last 4 years. The last time we got excited about a war was exactly 1,780 days ago. All right, 4 years. And that was the Russia-Ukraine war. And, that was, then it wasn't the US involved. It was out there in Europe, but it caused a lot of panic as well. All right. And so we haven't had a war for a while. Okay. And so you've had this, and all of a sudden there's this shock. And I call this, and you know this, I've said this many times, the broken arm syndrome.
Yeah.
Like, you don't know when you're going to break an arm. All right. And it's broken. But we do know what to do once the arm is broken. We set it, we cast it, and then we sling it. And then it recovers. All right. All these geopolitical events are like a broken arm. You don't know when they're going to come, right? But you do know what to do once they come, because good companies remain good companies. All right. And if anything, the advantage is you get a mispriced. The war allows people to panic, and it starts off with fear. Then it goes to panic, and then it goes to recovery, right? Just like your broken arm. Fear, oh my God, it's never going to be fixed. Panic while they're setting it, and then a recovery. So this is in essence what's going on. It just happens to be involved in an area that has always been a contentious area. All right. The Middle East, it's just always been something about that area that is unsettling. All right. And it goes back in history to 1979. So I think we're going to resolve this one, and markets will get over this like they do with Russia, Ukraine.
And I agree with that. I think this one's a little bit more unusual because of the oil situation. I mean, we saw oil futures on Sunday spiked about 120, and we've seen this whole kind of full circle. I mean, today I think we're at $81 a
Yeah.
barrel right now. So I mean, it's had a huge impact not only the markets in North America but globally. So
Yeah.
go ahead.
Mike, people get carried away with the word futures as if it's trying to tell the future.
Right.
All right. So the oil dynamics is very, very different now from the past oil dynamics. The US doesn't get oil. It gets less than 2% of oil from the Middle East. And the US is the largest consumer of oil. All right. Even more than China and Asia and everything like that. So, the US has explain to you, it's a net exporter. It exports 35% of its oil. So they got access there. So this is a bit of headline panic, and it's panic because Asia is not going to get their oil, which actually doesn't affect American manufacturing. All right. There's plenty of tomorrow the U.S. administration could turn around and say, we're not going to start exporting. That 35% that's going out, we're going to keep it back in. It's the rest of the world's problem, not North America. And Canada, we don't really have an oil problem.
And I agree with that. I think what happened is, I mean, the headline risk was, basically energy goes up, inflation goes up, then we head into a recession. And so the recession word started coming back out. And I think you and I would agree that we don't see a recession, at least here in North America, especially in the US. When you look at what's going on with earnings and the earnings seasons that we just finished as well. So, I mean, companies are actually doing quite well. And maybe you could confirm that. Do you see a recession at all in the US or in Canada at this point?
What I do see in certain areas, there is a concern, like housing is an example of it.
Yeah.
Okay. There's a fear that interest rates won't drop as fast as people are expecting. Okay, you're thinking about 2 drops maybe for the US. This might make it a little harder to get 2 drops in, maybe 1 possibly. So that's going to become a worry that the market's going to put out. Canada has a bigger problem. Okay, that we messed up a lot in our management. We're more actually in debt in certain ways. If we don't be smart, our manufacturing is going to be lost to America or down to Mexico. So we have a problem. So yes, there are certain areas of recession, but generally I don't see it because GDP in America at 2% even is very strong. All right. And they have an edge over every other country with technology.
Right. What do you think about the IEA countries meeting later on today about the release of the oil reserves? How do you think?
I think that's smart. I think it's reactionary, but it's smart. And I don't think they have to do it at all. All right. I don't think there is more than enough oil out there. Think about it this way, Mike. We've had electric cars come in, all right, which weren't there before.
Yeah.
All right. Now, they're not a large part of the auto industry, but they are some part of it. Okay. And we're using electricity and oil and things like that a lot smarter now than we were before. And in the US, they're exploring nuclear technology, all right, which will take us off oil. So even though oil is a major part of the world, you're actually seeing people walk away and think about alternatives.
Yeah. It's funny. Yesterday, you and I were talking around this time, and we're saying I was surprised that Trump hasn't spoken either Sunday night or yesterday, talking about giving us an update about what's happening in the war, because I thought that he would help to use that Trump effect to calm the markets a little bit. And then shortly after yesterday, there was a announcement that he did release that they're almost done the war. And then I guess he spoke around 5:30 last night, which I did watch. But maybe talk a little bit about the Trump effect. What do you think it'll do? His thinking about the marketplace.
Yeah, so this is important to understand, right? First of all, it's not about liking Trump or not liking Trump. It's got nothing to do with that. But you got to understand how he measures things. He measures his success by the stock market. He said it many, many times that he wants the stock market to go up so the economy feels richer and people feel richer. And if you look at his first term, the markets went up 66%. All right, during that whole period. So he wants to beat that. He wants to be the president with the highest return on record. Right now, he isn't.
Right.
All right.
Right.
But he wants that. That's Clinton was that. He wants to beat his record. So he has an opportunity in these few years to really swing it higher. And so he's going to put Warsh in as the Fed chairman, right? Which is going to help. He's going to get, he has to settle trade, all right? Which brings more income, get more companies going back to you. He has to win on that. And then he also needs to sort these wars out. So all of this has to happen, and it has to happen before a certain deadline, which is November the 3rd, this year. which is the midterm. So there are defined times, all right? So he has to work towards that. Look, you can't move November the 3rd. You can't change it to November the 4th. All right. It's like Christmas. It's December 25th. So
Yeah.
he needs to have at least the same amount of seats or more for him to do all of his plans next year. So you're going to see a lot of things happen between, basically now and then. And they're going to be positive for the markets. And I'm not going to say there's not going to be volatility because the media likes creating volatility.
Right. And I agree there. I think if he wants to win the House or Senate, I mean, he's going to do everything in his power to try to make sure that hopefully some of these things are resolved for a whole bunch of reasons, not just from a market perspective, but for humanity perspective. But I think if he wants to win and have the same control he has now, he's got to change things rather quickly and push things on a positive. You were talking about Bassett yesterday, Scott Bassett. Just
Yes.
maybe you want to share that as well. Maybe a little bit.
Scott Percent to me is the ace in the hole, right? He is the best person Trump could have picked, right, as Secretary of Treasury, because this is the guy that was the genius behind George Soros when he bankrupted the Bank of England. They made 1 billion. They basically bankrupted the entire Bank of England, and it was Scott Percent that did that. All right, with George Soros on how to do it. So, and Stanley Druckenmiller is his friend as well, right? Stanley Druckenmiller is an amazing investment manager. Never had a negative year, 30% a year type of thing. So he's got the right caliber of person there who understands finance, economics, and the treasury markets and how to use it. This guy is going to do everything right. All right. And when you hear him speak, he actually tells you, he leaks little things. And he's already told you that we have many tools to use this year for the economy. All right. He said that in December. He goes, we're not worried about this year. We've got lots of tools. And it's not just interest rates. And part of it is something that was happening today. They went into the market and bought their debt back. They bought $15 billion of debt. Like, it's little things like that that they can do. Okay. So I think he is truly the genius of that team. Everybody else I don't know about.
Yeah. Like, question: how about the tariff? I mean, we saw the Supreme Court rule against the tariffs, and then we saw a new tariff introduced at 15%. Is this thing like where do you say this thing heads? I mean, this increases the volatility in the marketplace as well.
So what the tariffs are trying to do that I know we as Canadians know, like, he's trying to create an equal playing field. Right. I'll give you an example of that one. American cars going to Germany, right? German cars coming to America, they have something like a 2 to 3% tariff. But American cars going to Germany have something like a 40-50% tariff. And so that 2% to 50% is outlandish. In fact, it meant more German cars were coming into America and less American cars were going into Germany. So all he's asking for is a level playing field. All right. So that's how it all started off. And China pays zero tariffs. All right.
Right.
Before. And he was saying, how is this that, they're not a small nation anymore? The number 2 nation in the world. And yet WTO, World Trade Organization, gives them basically zero tariff rate situation. So he said, let's even up the whole field. All right, let's even it up. And that's what this whole discussion was about. It's a bit unfair because we had it pretty good. Europe had it pretty good. And now we're being called to task. It's exactly what he's doing with NATO. With NATO, the US was paying 5% into the defense budget, but everybody else was supposed to pay 5%, but they were paying 2%.
Right.
So it's fairness. It's just asking for fairness.
So, Randy, you talked about I mean, the volatility is not over yet. So, I mean, it's hard to believe. I mean, we've had a lot of volatility in 2 months and change here. But maybe just talk about, because I do want us to get that message out. I mean, this is a midterm election year. Maybe just talk to everybody, give them an idea what normally happens in midterm election year, because the volatility, I would agree, is not over yet. And we're talking. Then we'll end the discussion with two things, if we could. One is I want to talk about the good, the AI, what we see as great opportunities, And then maybe we'll end by giving me a forecast that I know what your numbers are. I know what my numbers are for the end of the year from the S&P, just so that it gives people some idea of what we think is going to happen by now until December 31st. So just maybe talk about the volatility, because I mean, I agree with you. I do not think this is over. I think it's going to be in and out. I think it's a little bit of a trading market, meaning that you need to be more tactical in nature in this marketplace, because you're going to make a little bit of money, then you'll lose a lot of money, then you're going to make some money. But by the end of the year, you'll will turn out to be pretty good. But just maybe share with the group what normally happens in a midterm election year.
The midterm election is more important than the actual election year. And the reason is the US government made out of three parts. All right. The House, Senate, and the president. So it's you have to have all three on your side to get policy through, or you have to have a majority of two on your side. Okay, so in an election year, you get to choose the House and the Senate on this side. So right now, the favors are slightly in the Republican side, so they can do things. They can put laws through. Well, if that changes on November the 3rd, that makes what you call a lame duck president. That means he can't do a lot in the last couple of years. All right. So this is why it's important. And so the opposition will do everything possible to make sure they get extra seats on November 3rd. Everything possible. That means get media on the place. That means, bring out all the ex-presidents and everything. That means, going to funerals and giving speeches. Not how good they are, right? Compared to the rest, right? Remember by Jackie Jackson, Jesse Jackson's, right?
Yeah, I saw
But so it's about misleading the public. So this creates volatility. If you look at the midterm election years, the last one was 2022, 4 years ago. All right. And then we had a huge crisis, right? We had Ukraine-Russian war, and that was roughly in March time. And then after that, you had high inflation at 9%. All right. And then they jacked up inflation. So in a midterm election year, you usually get two sets of volatility in the first quarter and usually in the third quarter. So 2022 was it. The midterm election year before that was 2018. And you had it drop in February and then again in September. So the degree is different. All right. Sometimes the February is bigger than September. Sometimes September is bigger than February. All right. In 2018, September was bigger, but in 2022, February was bigger. So we should expect. Sorry.
Yeah, go ahead, keep on going.
So we should expect volatility to be part of this. But here's the key thing: you always recover the year afterwards. Always. Here's a crazy little stat. Since 1942, that's a long time ago, in a midterm election year, when you were bought on the midterm election day and sold on June 30th, there has never been a negative return. That's a crazy stat since 1942. All right. So this tells you how much relief happens after a midterm election year. So the advantage is taking advantage of this volatility with your planners, with your financial side. And instead of being afraid, look what Stanley Druckenmiller said. He says, don't look at today, look at a year down the road.
Yeah. But maybe to let the group know what the average draw in a midterm election. When you look at every midterm election, what's
17%.
Yeah.
17% is the average drop, and the recovery is 31%.
Yeah, that's the message I want to send, because we talk about volatility, right? This whole thing was about increased volatility. It's not over yet. And I guess what I want people to understand is that it's not over yet. And so there's going to be a lot more bumps in the road. In fact, if you look at history, the bigger bump, it hasn't happened yet.
There's a lot more opportunities to take advantage of opportunities.
Well, then that's the key, right? At the end of the day, what we will be doing is at some point you'll see increasing cash position to take advantage of any opportunity that may occur. And so one is, we get paid to, protect your money, and two, to make your money. And so you'll see that there will be at times in your portfolio that there will be a little heavier cash positions because we think there's going to be some bigger opportunities sometime throughout the year. So expect that as we move forward. So again, increased volatility, but at Let's talk about some companies. I mean, we talk about AI, the growth, so I mean, the spending that
Yeah,
on capex. I mean, there's so much going on. Maybe let's spend 2 minutes on that, and then we'll close with what we think where the markets are going to end by the end of the year.
AI is probably the most important change going forward on the way we do things and productivity, even more than the internet. All right. AI wouldn't have happened without the internet. I use the AI literally every day. Right. I even use it for grocery shopping. All right. Like literally, I'm buying from the store and I'll just ask AI quickly which store in my nearby 1 mile or 3 mile, 3 kilometer region has it cheaper. And it's within, or which gas station near me has it cheaper. Right. And it's really good. And then I'll ask it questions. So it's getting more. It hasn't got into the corporate side, the enterprise side yet, but it's coming. And all of us are going to, it's going to change jobs. Crazy. All right. So AI is going to improve things, productivity. Just like we had the fear at the beginning of the internet, and now we're all using it. All right. We got it on our phones, we got it on our watches. AI will be similar to that. So I actually think it's a fantastic tool.
Is there any companies that you like best in the AI space that
The
are
company, the
top one
company
for
that,
this?
so I'm not recommending it because that's up to your portfolio.
Yes, of course.
I'm just giving an example of the company. The only company that is in all vertical streams of AI, that means in every single business part of AI, there's only one company, and that is Google. So Google makes chips. Google has the software. Google has the enterprise side. Every part of Google their search is AI. So if you look at that, it's called vertical integration. It's Google. The next company after that is going to be the Microsofts. All right. And then all these are the companies, but they all need chips. All right. You're all going to need the different types of chips. And still, so far, NVIDIA is the champion on that. All right. They're dominant. Now, there is something that Microsoft's working on, which is very, very cool. And it's about 3 years away. It's a quantum chip. It's called Majorana. And it's not related to me. I'm renaming it. But it's like 10 NVIDIA chips in one.
Wow.
And it's super big. It's about 3 years away. They already have it running. All right. It's called a quantum chip. It runs on qubit. And I think our world's going to change in about 3 to 5 years. Okay. And we're going to have a huge leap because of this.
Well, we're in on this, Rana. I mean, we've seen volatility. I'm just looking. I can see the markets just behind us here. I can see that the S&P is almost back to the all-time highs. I mean, it's amazing what's actually occurred. So when people are worried about the marketplace, we're basically back to where we were at the highs of this year so far, or very close to it, anyways. Where do you think we're going to end up in the markets by the end of the year, if using the S&P as an indicator?
Okay, so the S&P as an indicator, I think by the end of the year, from the beginning to the end, it will be probably up about plus 11%. All right, from the beginning to the end, okay, including the drops inside of it. So that would work out to around 7,400 to 7,800, somewhere in that range makes total sense. Okay, you will have a couple of sharp surprises, but because of this administration, they're very active in the markets. You will also have very sharp recoveries. So this is why having a team that is on the ball, all right, already knows the good companies and can take advantage of that. All right. This is going to be as so if you want to kind of beat the market, you have to take advantage of these drops. All right. I think
Good
that
point.
I'm not afraid of this market at all.
So we're on the same page. We've indicated our clients that we think the S&P will be somewhere between 7,600 and 7,800,
Yeah.
with a growth of around that 8 to 12% rate of return by the end of the year. But we did say that we would have increased volatility, which we've seen, and it ain't over yet. But we're trying to capitalize on the opportunity. So when we see the VIX spike like we did over the last several trading days, or other indicators telling us that it's a good time to buy, or when we see certain stocks that we like that are under that have been severely discounted, we've been taking advantage of those opportunities. So, listen, Brad, I wanted to keep this conversation short with one of those factors. So we take our job very seriously. Trust me, the team's been working very hard to making sure that we nick through these waters. And today really was an attempt to make sure we communicated what we see happening, kind of what we're trying to do. It's funny, the game plan was originally to talk yesterday, but I ran out of time. And it's a big difference in conversation between yesterday and today. And it's amazing what 24 hours does. So again, I want to thank you for your trust and confidence. If you have any questions, please reach out to me or anybody from the Gold Leaf team. We'd be more than willing to help you out in any way we can. Thank you and have a great day.
Thank you.